What's going on YouTube? This is Harry, aka the Brand Builder, and in today's video I'm going to discuss REITs, real estate investment trusts, why you should be investing in real estate investment trusts, what it means for you, and how you can avoid a lot of costly hiccups just simply starting getting yourself in the know and becoming profitable as soon as possible, right? The moment you buy one REIT, you're profitable. You're talking about dividends and stuff like that. But there's also the right type of REITs to buy, and there's some REITs that aren't going to do you very well because their business model's not going to work anymore, right? Like REITs that own malls and stuff like that, and strip malls and shopping centers, because Amazon's disrupting the economy and making it so that people are no longer patronizing a brick and mortar retail location. So what's happening instead, rather, people are shopping online and using e-commerce. So this disruption can hurt people in many different ways. If you yourself are an e-commerce business, it can disrupt your business, having and opening up more competition around your brand or what you do. So it's going to get a little harder to brand yourself in the e-commerce world unless you have a lot of experience in what you're doing and you know how to invest in the things that are going to make you money, and you know how to angle yourself so that profiteers can't disrupt you so much. You know how to market and list your products where you can't get hurt. Now, real estate investment trusts, they trade like a stock. They have higher taxes than a stock. I think around 30 to 35%. Correct me if I'm wrong. You could leave a comment in the comment section and let me know. So why REITs rather than physical real estate investment properties? I would never make a distinction and say one of these is better than the other. I would only say that one is probably designed more for someone who's a professional, go-getter, hustler, extremely ambitious, and has the willpower to tolerate a lot more than everyone else. Because some people just want to make consistent money and income, but they don't want to deal with the headaches of dealing with a tenant that may not pay their rent, or deal with vacancy, or a tenant that creates damage in a home, or costly plumbing calls or bills, being woken up at 12 o'clock at night because somebody's sink is leaking or something like that, or something's going on, or the water pipe burst in the middle of the night. So instead, one of the best things to do is to invest in a real estate investment trust, buying some shares. You can even go as far as to invest your first $1,000 and pick a diversified portfolio of REITs, and I'm going to tell you in a few seconds which ones are better than others for now, in my own personal view, and why I feel that way based on current events and based on new knowledge. So as far as real estate investment trusts are concerned, you can build a great portfolio of real estate investment trusts over time. And if you'd like, you can grow at the same pace as you would with a rental property before you're going to get another one, right? So for example, a real estate investment trust portfolio, as far as stocks are concerned, and check out the link below. If you find a way to make yourself an extra $500 to $600 a month, which will take some capital, but not as much as you think, if you could make $500 to $600 a month in real estate investment trust, you have some cushion now. So if you go and get a physical property and you want to make higher returns, because yes, the difference between a rent and a physical property is the physical property is going to probably make you a lot more money. So it's going to be a higher return on investment. The REITs are going to be a little safer, because you don't have to deal with maintenance, you don't have to deal with headaches, you don't have to deal with a lot of meat and potatoes. So with the REITs, you're going to be dealing with vegetables because it's going to be easy investments. The returns aren't going to be as high, but they're going to be steady, they're going to be consistent, and they're going to give you a little bit of power and authority to really take advantage of the market in a very profound way and give you experience as an entrepreneur to do something very profound, which is be heavily invested in real estate without having to take on the headache of dealing with renters directly, right? So, in the REIT sector, there's a few things that you can benefit from investing in REITs because of certain things taking place in society today, such as issues that I don't really like discussing very much, but political reasons. There's a tax plan being introduced, and then there's a delay in that tax plan. Stock analysts are saying that the delay in the tax plan is going to cause a pullback in the stock market and basically affect the stock market in a very negative way from what I'm hearing stock analysts say, because I read a lot of articles on Yahoo Finance every day and different other sources, and also because I like to read a lot of magazines based on stock investing. I have a lot of books about it. I try to read at least 2 or 3 books a month about stock investing. I'm going to be doing some book reviews too, as far as that's concerned. And I'm also going to do a video about closed-end funds and ETFs, but I'm going to do a little separate. REITs are today's topic. So what do I like about REITs? I like the fact that I can take $20, put it into a REIT, invest it, and that $20 can get me a return of 10 cents a month on my dollar. So if you were to amplify that and say purchase 2,000 shares for or 1,000 shares, okay, now that would obviously be $20,000, but it would be $100 a month consistently. Now with that $100 a month, I can buy 5 more shares every single month, over and over again, compounding the interest if I don't need that income right away. I can also use half of it to purchase stocks. Don't have to use the whole thing. But if I use the whole thing, I can get more and more shares over and over again as I continue to keep reinvesting. So that's one good thing. And at some point, it'll almost be like you're renting out a property, right? So let me tell you what I think is going to help you as far as REITs. And the reason why the delayed tax plan is not going to hurt REITs is because REITs don't pay taxes. The special plan for REITs with the federal government, by law, they're mandated to distribute a minimum of 90% of their returns to their shareholders in exchange that they don't have to pay any taxes, which kills the tax plan and gets it out of the room. Bye-bye, elephant, as far as REITs are concerned. Now, the next thing is REITs do have a higher tax than regular stocks, but who cares? They also have a higher dividend distribution, so it pays for itself. The next thing is, now, Bitcoin. I'll probably make a whole video on this. Yeah. Some people think that Bitcoin might disrupt stock market or anything like that. People who own Bitcoin have to live somewhere. They might as well live in a property that you personally own, especially if they're going to stay in a hotel. And that's a sign. A hotel is a great REIT to invest in. Why? Hotels aren't going anywhere. Strip malls, you might have a problem. Shopping centers, you might have a problem because of Amazon, of course. But healthcare, people are always going to be getting sick. If the population increases, people are always going to have health issues. Healthcare. Another one is, ooh, bet you can't guess it. What is it? I have a lot of stuff written down here. Healthcare, hotels, residentials. That's right, residential. Yes, of course. disruption in the economy means that residential is going to be like this, spiking. The real estate market's going to really have some disruption. And I dare say that that disruption is going to deal primarily with less people running out to buy homes for themselves to live in, more people such as landlords who are trying to do real estate investment, buying properties to rent out to other people. So the real estate market's going to get shaky, but it's also going to get better in the long run. Trust me. More houses are going to sell, mostly lower end, and depends on where Bitcoin's going too. You might have some people moving here and buying really nice houses. If the housing market or real estate market starts accepting Bitcoin, then who knows? Maybe you'll have more house sales pretty soon. So the next thing is REITs and how to reduce the taxes and how to deal with paying the taxes with REITs. I'm going to do a video about ETFs. There are ETFs that track REITs, right? There might be a lower tax rate with the ETF. Stocks, you only have to pay 15% in dividends. In taxes, sorry. So that's one thing to think about. So REITs is almost like investing in a rental property without the headache of having to deal with showing your property, getting tenants, and all the other headaches, such as maintenance, being called and woken up in the middle of the night about something ridiculous. So I hope you guys like this video. Below there's going to be a link where you can actually get a free share if you'd like to do commission-free trading on Robinhood. So use my link. If you use my link, you'll get a free share of stock. If you don't use my link, you will not get a free share of stock. So make sure you use my link. Commission-free trading with Robinhood. It's going to be a lot of fun. You're going to love it. Subscribe. Follow me on Twitter. Enjoy your day. Anybody have any questions? Maybe I'll do a part 2 to this. There's a lot you can benefit from with REITs, but I just wanted to quickly make this video for one of my subscribers at his request. Thank you very much. Have a great day. Like and share. Thank you.